Perfect, guys. So the session that we'll be having right now, as you can see on the screen, it's from blocks to watts, the Bitcoin mining revolution. So we'll be having specialized people from hosting and I would say Bitcoin mining ecosystem here, starting from Hummus Hosting, and we have Cedric Boerma, who is the CEO of Hummus Hosting. Then we have Nico Smid, who is the founder of Digital Mining Solutions and head of operations of Rpool. Then we have Fabian Weber, who is head of hash rate in TerraHash.space and head of business development in Rpool. And of course, Kevin from NiceHash, who heads the business development. So we'll start with the basic introduction first. So I would invite first Cedric to have the words, please.
Thank you very much, Sunil, for that introduction. So I'm Cedric from the Netherlands. Husband and father foremost, but Bitcoin is a close second priority in life, I would say that. Started experimenting with Bitcoin in 2017, mining in 2019, just from my garage, fiddling around with old miners, and then immersion cooling became a thing. So kind of grew from there into building our own containers and then hosting mainly in Norway now. With 6 megawatt that we have developed and 3 megawatt under management right now. So yeah, I believe that's the briefly how we got here.
Nico Smid, gentlemen.
Yeah, so I'm also from the class of 2017. So good to share a stage with you. I got into Bitcoin in 2017 and started mining in 2021. I have a background in international business development. Helped a lot of Dutch companies establish abroad and try to transfer that skills to the mining business. At Digital Mining Solutions, we offer market intelligence services. So we write and research the industry, provide master classes, and also provide consultancy services to miners. So we help miners establish, grow, and scale, reassessing or assessing business cases. Helping optimizing pitch decks and finding the right sites where they want to get started.
Hello gentlemen, happy to share the stage with these OGs. I'm from the 21 class. This is when I got into Bitcoin, obviously at the all-time high. And we started our company, TerraHash, 3 years ago in end of 22. And we basically started off because there was this narrative evolving around burning overcapacities and electricity. You know, we are from Germany and we're building out wind, solar, a lot of renewable energies. And we have a problem there. And we thought that Bitcoin mining will provide a suitable solution for this problem. And from there on, we moved along. Right now, we are running Finland's biggest mining facility, which is actually also used for district heating and also providing demand response. So basically serving as flexible load in the Nordics. And we're investigating this use case also for Central Europe, basically in the German-speaking room. And yeah, I'm happy to be here with these amazing industry leaders, and I'm happy to share the stage with you. Let's go on.
Thank you. Kevin from NiceHash. My primary title is Head of Business Development, but we are a small and agile company, so I'm a jack of many trades. Business development, strategy, new product development, ideas around hash rate, that's where I thrive. Sunil can most likely confirm that, but about my history, first, contact with Bitcoin was through mining, obviously because I wanted to make money, and it started in 2012, 2013, somewhere in the break. Still here.
Are you sure you said small company?
Yeah, it's a small company. I mean, it's not a lot of people,
Yeah, okay.
Very lean company.
So guys, we'll be starting with the questions. And the first question is the big picture question that I would like to ask the panelists here. Is what is the single most exciting aspect of Bitcoin mining today that does not get enough attention?
And you're looking at me, so I'll take that question. I think for me, the most exciting part is that the industry is maturing and we see people from different sectors coming into mining. So where previously it was mostly computer nerds, let's say, that were fiddling around with machines. Now you see people coming from different industries into mining, and that brings a lot of innovation. So I think that's great. Also, you see more traditional finance being interested in the sector to get exposure to mining, and I think what's being missed by many people is that we still live in a bubble. It's still very not a very open industry, and we use a lot of jargon that's unclear to a lot of people that are not from the industry. So building that bridge between this mining jargon, this closed industry, to opening up more and inviting people to join, I think will boost a lot of innovation in the coming years.
I also believe that we are now actively witnessing a change of the industry. Nico already outlined that we come from a, let's say, nerdy industry path, where you basically plug in your miner into a wall plug, get cheap electricity, and you blow out the air. So Bitcoin mining was mostly, I would say, an investment for a lot of people. And this is also where we see, as Nico told already, more and more entities stepping in. But talking for the US or also for Central Europe, we are starting to comprehend that Bitcoin mining can also be more than just an investment, but a utility, and provide a solution for really big problem that we are facing in energy markets. So seeing this shift from just a traditional, or let's say nerdy, shady industry to a more utilized industry where Bitcoin mining is not just an investment, but also serving another purpose is really interesting. And especially when you count in the different revenue streams. So in the industry today, or where we are heading to, you don't only have the mining as a revenue stream where you get your ROI or your investment back, but also additional revenue streams like the selling of heat or providing basically flexible load.
Can you repeat the question quickly?
Yeah. So what is the single most exciting aspect of Bitcoin mining today that does not get enough attention?
So, okay, let's divide this topic in two parts. We have Bitcoin and we have Bitcoin mining. The most important part is that we understand that it's a symbiosis of those two things. One does not exist really without the other. But if we specify the view on mining and on hash rate, where just I thrive, then I have to say that I'm seeing more and more people, like, I don't see enough people thinking about hash rate as a commodity. It's essentially a stream of data that has a value. It carries value. It's almost a second layer of transaction, where you can do transactions, because essentially you are providing work, somebody pays you for that. And the way how the system at the moment is set up, especially with our real-time PPS, so you're essentially getting paid for everything, it's essentially something that you can monetize in real time and maybe even do many other things like hash rate-based lending and stuff like that. So I would like to see the industry step out a little bit of the conventional mining and actually seeing the complexity of what hash rate is. I think it would open a lot of doors to new ideas, to new ways of transacting, new ways of monetizing, new ways of, just accelerating the industry.
Amazing.
I'd just like to second that. It's all of the above and the amazing resilience of the sector, the creativity with which this sector has approached problems, rising energy prices, rising difficulty, even chip shortages. It's just amazing how this industry has proven to be so resilient, just like Bitcoin itself.
Understood. The second question comes from the state of the industry question.
Sunil, what's your opinion about it? You're a miner now. Now you have to give input.
But today I have obligation to be a moderator, so I want to be a listener today.
Okay, good.
Yeah. So the state of the industry question is, how has Bitcoin mining evolved over the last halving? And where do you see it headed after the next halving? We can start with you, Cedric.
Good one. I suppose we've already been through the institutionalization process, that from home mining these projects have become bigger and bigger, going from a few servers at home to containers to huge buildings, and now multinational institutions with huge sites all across the globe. I think it is plateauing in that regards, and we're going back to a more decentralized format, because the large opportunities have now been seized. All of the cheap, abundant, large energy sites are already operational or finalizing their development. So just like the pools are evolving and becoming more decentralized, so will mining. They will have to find new opportunities where heat reuse and demand response will be more important to offset these higher overhead costs associated with smaller sites. But I think that's a good thing. Decentralization, once again.
Fabian.
Catching up on decentralization, I believe you already mentioned that a lot of institutions went in and are still in the process of evaluating getting a mining exposure instead of just a Bitcoin exposure. Reason for that is that if you hold Bitcoin on your balance, you're basically investing into a static asset. Mining comes with different characteristics. It's a dynamic asset. You have to count in depreciations of machines, all that stuff. And another trend that I observed over the last, let's say, 1 to 2 years is that solo mining industry is becoming bigger, right? Suddenly we have products around nerd miners, nerd access, bit access. So I believe that this is actively contributing to the decentralization of mining. And also it gives, let's say, outdated hardware basically a second life purpose, right? You can just get out the chips and reuse them in a maybe less profitable way, but at least there is a utility for these kind of chips.
Yeah, maybe to add, I already mentioned it in my previous presentation. Efficiency of miners have been going down, or it's been improving a lot post-halving. There's now sub 20 joules per terahash machines widely available, and the first sub 10 joules per terahash machines are announced. So the focus will be more and more on operational efficiency in the coming years. And next to that, and that also contributes, I think, to the decentralization, is that we see more and more Bitcoin mining being considered as compute. It's a computing power, a computing load. And I expect more merging of the HPC, AI, HPC industry with Bitcoin mining. Not only Bitcoin miners pivoting to AI, HPC for a revenue standpoint, but also traditional data centers integrating mining because it's a flexible load and allows them to participate in demand response programs, optimize their energy management.
Understood. Touching the topic of energy and sustainability, what are we missing in the sustainability conversation around Bitcoin mining? Is the criticism misguided? How credible are the claims of Bitcoin stabilizing the grid?
Well, I think it improved a lot over the years. There's been many positive reports out there. So I do think we need to focus on that, not to play the victim anymore. I don't think we are a victim. There's enough positive projects out there to prove criticism wrong. I think there will always be criticism because of the debate whether Bitcoin mining is a useful case for energy usage, right? And I think that's a subjective discussion and not so much an objective one. So whether it's useful to use energy for mining or for PlayStations or for Christmas lights, that's it's an opinion of each individual person, I think.
Cedric?
Absolutely. No one should be able to decide from the top down who gets to use energy and who doesn't. There's a market price for energy. If you're able to pay for that energy, you should be able to use it. And that's what Bitcoin is doing. And they're moving to stranded energy areas. Ourselves, we're operational in North Norway. The government there made a mistake, if I may call it that, of subsidizing building huge dispatchable hydro plants. when nobody is living there, there's hardly any industry, so there's no off-takers. So the government makes a huge investment with your tax money, and then there's no off-takers and there's no ROI. So now the Bitcoin miners are going to Norway, and they're actually buying that electricity, making sure that eventually those sites do ROI, and with completely clean energy. It doesn't negate the fact that more energy consumers lead to more production, and not all of that production is clean. For example, in the United States, many plants are still burning coal. Yeah, of course, there is environmental and medical impact on people that live nearby these plants. But yeah, again, it's a market price, and more energy consumption will lead to more innovation more quickly. So we should not focus on consuming less, but more.
Putting out the recent numbers, I believe that Cambridge just pulled out a report that states that Bitcoin mining is to 52% sustainable or running on renewable energies. And coming less from the technical perspective, if Bitcoin mining is a renewable or let's say a sustainable industry, I would love to say that these 52% of renewable consumption have been achieved without any sort of subsidies. So it's basically the single one industry in the world that managed to get to this degree of renewable energy consumption without any subsidies. And what is really missing, because I think that was the initial question, is all around the fitting models. So we are basically industry experts. We know that it is super hard to guess or to get the numbers for renewable or for the electricity sources that are used by miners. So finding the right models to get a better understanding of the percentages that are used to determine the renewable energy that is used in Bitcoin mining, and also, of course, regulation. Regulation in this thing or in this topic is really missed. Talking for the German-speaking countries, they don't even make a difference between using renewable sources or fossil fuels or whatever, which is basically a bit contradictory if we see what's going on in the whole renewable energy market. So I think there's a lot of work to be done, not from a technical perspective. We all understand that miners have this tendency to search the cheapest electricity sources, which are, in general speaking, renewables. But we have to take this hurdle of regulation as well.
Well said.
I don't know. I'm not an expert in that, so let's skip this one.
Okay, speaking about heat reuse, we have Hummus and TerraHash here. There are some fascinating case studies of Bitcoin mining heat being reused for greenhouses, residential buildings, and more. What real-world heat reuse success stories can inspire broader adoption? What are the limitations or challenges when scaling heat reuse technologies?
Yeah, this is has turned into our expertise in the search for new capacity. We found it's very hard to get new capacity, so you end up replacing existing heating solutions with Bitcoin mining. So that's mainly what we're doing. Again, the rest of the question?
So, apart from that, is like what real world heat reuse success stories can inspire the broader adoption, and what are the limitations or challenges scaling them up?
Sure. So examples are heating greenhouses in the Netherlands, in Switzerland, us heating buildings and serving industry in their heating demands in Norway. And as an example, we've recently started some projects in the Netherlands where they're using heat pumps and groundwater to heat large buildings and industry. But then at some point they've extracted so much heat from the soil that it actually freezes. So you need a base load for heating your heating demand in many cases. So Bitcoin mining on a smaller scale in combination with heat storage could be a worldwide solution to many problems.
Fabian.
So basically, I believe there are a lot of utilities from small scale, like heating up, your own house with 1 or 2 miners and using your solar that you have on the roof, up to industries. So we are basically a spin-off of a mother company that has 300 employees, a typical German industry that is having or basically into manufacturing. And they need basically heat for their industrial processes. instead of selling the overcapacities during the summertime to the grid for on average 1.5 cents, we came up with this idea of sending this overcapacities to the basement, mine Bitcoin, get a revenue of something between 10 to 20 cents per kilowatt hour, and repurpose the heat. We also had a pilot in Switzerland where the city authorities wanted to explore of how electrifying the heat via Bitcoin mining plays out compared to heating with gas. In Europe, we have this issue that all the countries are committing in not using gas anymore until I think it's 2035. So they are investigating, exploring actively other solutions, and Bitcoin mining is a really viable solution here. And I think, the biggest project that we have so far is the district heating in Finland. And I'm really proud to present this business case. First of all, we sell the district heating company the heat, their own product, cheaper as they can produce it. So basically, we are providing heating as a service for them. And secondly, the energy, the electricity that we use for our data centers is CO2 free. That means that the heat that we provide is also CO2 free, and that provides a solution for the district heating company until 2030 to only heat up their houses or to provide heat that is actually decarbonized. And another point that I want to outline when it comes to scalability is again the regulation. When you build a business around mining, you always have to go in accordance with the law. If not, things like in, let's call them third world countries like Paraguay happen, where you suddenly get kicked out of the market, where prices suddenly raise. All these things happened just recently. And also you get a lot of, let's say, economic benefits when you build up let's call it a whole integrated mining solution where you basically intend to consume overcapacities, where you basically intend to reuse the heat because you can get certain amount of subsidies for it as well. So regulation is not just bad. When you know how to set up a proper mining farm or when you know what you're actually doing, you can also create a lot of economical value for yourself out of it. And at least what's necessary for scaling these concepts further is basically also the commitment from the manufacturers. So far, my observation was that the chip industry in general, from your laptops, from your smartphones, from the miners, they always were produced to produce less heat. Now we see this trend that manufacturers turn around and they start to produce or to explore the technology that is actively producing more heat to fit into these integrated systems. They are working on their API solutions or the API interfaces to make it more scalable when it comes to, reacting to the demand response programs. So this is an early stage, or we are still in the early stage. This industry, especially we call it internally integrated Bitcoin mining solutions. I would say it's now on the stage for at least 2 years, and we have a big way to go here.
If I may add to that, as you mentioned, manufacturers are pivoting away from just focusing on efficiency, as it's kind of plateauing with the 3 nanometer chips right now. Unfortunately, MicroBT has led the way, and also Bitmain is now changing course in that regards, producing servers that can produce higher temperatures. In one of the deployments, we've seen successful temperature output of 75 degrees. That's bordering on the edge of what's considered low-grade waste heat and high-grade waste heat. And I suppose this is a race to who goes over 100 first, who's able to create steam and distill water and recapture energy by producing over 100 degrees Celsius. So I guess that's also to go into your limitations question. The temperature is currently a limitation that can be overcome.
Moving on to decentralization versus industrialization. The question is, are we at risk of mining becoming too dominated by institutions? How do we ensure Bitcoin mining stays decentralized? And does solo mining have a real future, or this era is coming to an end? And I think I'll start with Kevin first.
So I like to do the analogy with, how metal was refined back in the days. Back in the days, it was a very, very high, It was a high revenue business. wearing something made out of steel was considered very expensive. It was a luxury. It also feels like in Bitcoin mining that the people that were here early, they could make a lot of money. But because it's such a unique and almost perfect system, it attracts a lot of people that want to build on it. And while they are building on it, they are competing. It's always the same size of the pie. And obviously, people that have more money are more competitive. So yeah, we are experiencing heavy centralization. I think we are in danger of centralizing it further. And I think for that, every single miner at scale has to do measures to contribute to the centralization properly. In forms of, and you see it more and more, bigger miners tend to not mine on the biggest pools. They sometimes use even very, very small ones. They go solo, the solo route. They try to build their block templates alone. This is step by step, you're adding to a nicer view of the whole picture, essentially. How exactly we will achieve it in a money-driven business, that is a cash flow based business, I don't know. I don't have I cannot tell you what's the right way. But I think that the industry and the individuals in the industry are slowly doing the correct steps. I think that everybody should have an idea how to contribute. Be it with, buying a solo mining ticket on IceHash or like buying a BitX or something.
I love
like
it.
that. It's like small things matter, I think.
Yeah, I think we're nearing the peak centralization of mining, and that in the coming decade it will become more decentralized. And one of the main reasons is the competition of AI, HPC. They are taking over these big power blocks. I think these mega sites of 50, 100 or even more megawatts for mining is going to be a thing of the past, and miners will go more to the edges where AI, HPC cannot go because of the lack of fiber or because of the instability of the grids. So I expect this AI, HPC boom to push decentralization within mining, mining going to other jurisdictions, other geographies, and energy sources that are more remote, let's say.
Briefly, as people say, vote with your wallet, vote with your feet, also vote with your hash rate. So research which pools you dedicate your hash rate to, make sure they adopt the protocols and support the updates to the Bitcoin protocol that you like and that bring us closer to decentralization. Right now, if four of the largest mining companies on Earth collude, they have the power to perform a 51% attack, which wouldn't mean the end of Bitcoin, but it's a risk that we shouldn't live with. So, yeah, time to go in the right direction again.
Maybe to add to that, I think we touched upon pools, we touched about on miners, but there's a big centralization in the manufacturing of ASIC miners. And also there, if you can choose for maybe smaller manufacturers that provide more custom-made, tailor-made options for miners, that's the way to go.
Well said. Moving into the miner economics, the question is, transaction fees will play a bigger role after block rewards drop further. How will miners stay profitable long term? Kevin.
Spend more on the base layer.
Well, I think that every single miner should take a look at mining through many different eyes. So obviously, you guys that are the experts on the hardware side, you probably search for cheap electricity, how to reuse the heat and stuff like that. And that's the first elemental step, in my opinion, that will contribute to more profitability or being profitable in the future. That's the first thing. The second thing is, obviously, in the past, Bitcoin was performing very volatile. And through those volatilities, we call it bear markets, bull markets, whatever, a lot of miners suffered. And we need to find ways on how to make their lives easier. That's on the software side, on the economic side, on the trade side. I think there needs to be more products that empower miners through heavy times, like hedging, like spot marketplaces is a very good thing. We give, for example, a little bit of boosts when the market conditions are good, when somebody needs hash rate for something specific. I think it's just comes to the point where everybody will need to optimize everything to the point where he becomes competitive.
But where do you see transaction fees going?
Well, that's a thing. Like a block can pack only so much. What's the maximum amount of transactions? I really don't know. But we also have the smallest scale of Bitcoin, the smallest amount of Bitcoin that it can be a transaction fee. So I think that will eventually be the de facto point that our people are going to be paying for a transaction. It will go up or it will go down. I don't know, but everybody wants to transact as cheap as possible. So with the increase of Bitcoin, we're also coming to a point where transaction fees might never be cheaper than that. So it's a sword that cuts on both sides. You never know in which direction it's gonna go. That's my opinion.
Nico.
Yeah, I gave a presentation last year at Bitcoin Amsterdam where I described the miner of the future. And I think the miner of the future will not be a miner at its core, but it's other types of businesses that incorporate mining as part of the business. And by having other types of revenue streams, that's how you're going to be able to optimize your operational costs and also be able to hold on to the Bitcoin that you're mining. So it can be greenhouses that reuse heat, but it can also be factories that have idle power at certain hours. It can be data centers that integrate Bitcoin mining into their workload. So there's different opportunities there.
As our mutual friend of us all has said, writer of the Bitcoin Standard, Bitcoin is not just competing with the SWIFT network, it's competing with international banks, their settlements, which is basically shipments of gold. So Bitcoin in the base layer, it could compete with shipments of gold that have to be molten down to confirm authenticity. So when this is used as a settlement network between central banks, it's still so much cheaper than their current system. So when adoption continues, I don't believe that there will be a shortage of transaction fees in the future. And also a recent study has found a very strong correlation between an increase of the percentage of transaction fees as a percentage of the total block reward and decentralization. So when the block reward is cut in half again, and basically the transaction fees double respectively, that will drive miners to diversify across pools to basically get more stable payouts. At least that's the correlation that was found recently.
I think, on one hand, we had this like diversification of revenue streams, heat, demand response, and all this stuff. And when it comes to transaction fees, I think on average, we have now like 0.1 Bitcoin per block as transaction fees on average. Is that right? And I think it's the obligation of every miner when you do some, let's say, predictions and calculations to stick with that number. Honestly, back in the days, let's call it the pre-ETF era, I was expecting if an ETF is launched, if we see a strategic Bitcoin reserve issued by the USA, that transaction fees are going to surge. But we have to understand that these are basically, I mean, we Bitcoin maxers, we would call it paper Bitcoin products, right? Even if they are called spot Bitcoin ETFs. Derivatives, whatever. And I think talking about transaction fees, it depends a lot on how many people or what kind of entities will actually use on-chain coins and not the derivatives, right? Because when you transact with the derivatives, it's basically just a normal database that is not using the actual blockchain. So we miners, we do not profitate from these derivatives when they transact.
So who will the last parties be that use the base layer? It's probably collaborations or corporations or Fedimint type of structures.
Yeah, or it's, like interstate transactions between, really important transactions or whatever. But this is something which I would say is glass ball looking, right?
Well said. Speaking about the future of pools and competition, we have a question like, what is the future of mining pools? Can they continue to innovate without centralizing too much power? Kevin.
If you ask me, mining pools are stuck in 2019 or 2020. Like, there has not been innovations since then. We know that we see good stuff from Ocean happening. We see a lot of good stuff from Stratum V2. But in reality, we are adopting things that were part of the mining ecosystem back then. We just allow miners to do more things. But that does not inherently change the what pools actually do. They are, they centralize hash rate for a better luck, let's call it this way, and more stable payouts. There is certainly ways that pools can go, but I think that pools have to on own decide where that path is. Because at the moment we have a market where everybody is more or less the same as the other. And there is, in reality, no question why you would use FPPS pool A versus FPPS pool B. Of course, there is transparency issues and who pays what and how does he calculate it, but inherently they are providing the same thing. There is not a lot of steps forward.
So, for example, right now, if I go to a bank, I exactly know how much fee I need to pay. For example, let's say if I'm sending, $100 to Cedric. So I know this is the fee that I'm going to pay and this is what bank is going to charge me and this is the time that bank is going to take for the transaction to happen. Do you see the similar strategy coming into the pools where they have to be transparent at a point of time on how they calculate the rewards and how transparent they are when they are distributing the rewards?
Well, I think that every miner should push for that. Already, there is close to no real information how pools calculate it. And, it just lacks everything that is transparency supposed to be. Why they include transactions? How do they calculate FPPS? Why do they eliminate a specific block from the FPPS rate that has, for example, high fees? Of course, there is also the ethics part where, for example, extremely high fees are paid back. But, this is not a game of I'm going to be the ruler and you're going to do you're going to accept what I want. But it's a game of everybody should contribute and everybody should define how mining goes forward.
Yeah. As the industry becomes more and more efficient, I think it's just a matter of time before everyone demands to take a look under the hood, what's actually happening down there. And because in reality, even pools that do share some of this information in real world tests, as you've told me yourself, it deviates very greatly. You have pool A and pool B both charging the same fee. Just try it out and dedicate the same hash rate to both and see where you're at after a year. There's big differences under the hood.
Nico?
No, I wanted to add that the pool business is a very hard business, right? You already said everybody's charging the same fee or around the same fee. And I think more and more the pools will move to these ecosystems and that miners will choose their pools based on all the products that come along with the pool, let's say. So having everything at one place, different services being offered, of which the pool is just one part of that bigger ecosystem, is, I think, a trend we'll continue to see.
I think that miners at the moment are worried about profitability. A lot of them, they don't care how it works, why it works. In the end of the day, they want to see a number and they want to fit that number in their cash flow business. And I think that's what I already said before. Miners need to be respectful towards the network that they are contributing to. And I think that this is currently lacking. The respect from miners to the network that they're, making money from, essentially. So they should push. They should change a little bit of the mentality, what they do and why they do it.
I think there's a lot of education to do still, also for hosting businesses to educate their customers on the different options out there and the consequences of choosing one over the other.
Touching the same topic, I would also ask a question with regards to cloud mining. Again, Kevin, we'll start from you. Is cloud mining profitable or is it just hype? How do the economics stack up? You have to give an honest answer.
So cloud mining as an idea, I don't think is bad. It empowers people that want to have hash rate and want to do something with it. But the problem of cloud mining is that it's normally presented as a business that will make you money, that you will go out with profit. But sadly, what is actually happening is very often, not everywhere, of course, I don't want to point fingers, they use people and their capital as a hedge. They sell at the price from today for multiple months. So the FPPS rate, essentially. And the problem with that is that, you are essentially taking profits away from people and you're not giving them the chance to experience mining properly. That's the one side. And how it stacks up, we have tested it, we have, played with it, and in majority of time, people lose money. What a lot of providers are betting on is the increase of Bitcoin price. So the increase of the Bitcoin price should be higher than the decrease of productivity. Then it works. Otherwise, and only in fiat, not in Bitcoin. So if you want to do cloud mining, it's in my opinion probably for Bitcoin. It's in my opinion probably better to just buy Bitcoin. Currently, I'm not saying that there is not ways on how to do it properly.
We have new clients asking us all the time, and the answer is the same as when you're owning your own mining rigs. It's calculate your ROI in Bitcoin. Don't make the mistake of calculating ROI in US dollars or in euros. Those are not important. Make sure that you earn back the opportunity cost of the Bitcoin you're investing into that machine. And if those economics work for a certain cloud mining platform, then power to it. But someone is taking a piece of that profit. It's always more profitable to own your own infrastructure. You are taking additional risk, but you will make additional money.
Something similar to this, I'll be touching a topic of tokenized hash rate. Again, Kevin, sorry for asking too many questions, but it's really important for us to know. Can tokenized hash rate help retail miners and boost decentralization, or does it create new risks? Bigger question is, should we buy the Bitcoin or mine it, or how do we decide that actually? And this is with regards to the retail clients or the retail miners.
So tokenization is again it's a pretty broad term. It can mean a lot of things. Essentially, what I have seen now at the moment from tokenization platforms is that they are going essentially the same route as cloud mining, or they are allowing to buy a smaller amount of the hash rate. It certainly helps the network. You have people that are actively involved in mining, which maybe brings them further and deeper into Bitcoin mining. But and I think this is also a regulatory part, what I'm going to touch on. I think that we are regulatory not well defined enough to launch a proper tokenized hash rate product. No, I think that if it's called a token, I should be able to do something with the token, not only trade it. It's an asset. It's an asset with an expiry rate. So how can I utilize this token to accelerate a certain part of the business? I have personally not seen a token project that would allow you to use those tokens as a collateral for example, for a loan, and that's where, for example, directly owning Bitcoin gives you a big advantage, especially if you are betting on coming out with more Bitcoin than you would with just simply buying it. I think we have to go into the direction of creating products that concentrate on tokenizing the yield, so the production of Bitcoin. And if we find, which I think we have ways to do it, if ways on how to, connect the production to the token, then it becomes interesting, because then you're actively participating, you know what you're getting, and you can use it for further financial leverage.
Nico?
Even in a good case where these tokens will give you some kind of control over the actual hardware, allowing you to select a pool, for example, and help in the decentralization process, that can be shut off at any time. So I do believe it's a nice option to have, especially for people starting, just to try it out. Just like cloud mining could be a way to start and try things out. But I don't believe it's a durable path to decentralization.
I also think if you look at the decentralization, like the entities running these machines and creating these tokens, actually, like it kind of in a way drives more centralization, right? Because it's one player or a few players that offer these tokens that are able to grow their mining fleet. And you asked the question also whether to mine or not. What's the decision there? I think many need to realize that mining is a very different investment from just buying Bitcoin. It's an active investment. It should be considered as a business more than just a passive investment. And if you're looking for a passive exposure, I usually just recommend just buy and hold your Bitcoin and don't make your life more complicated than it already is.
You agree, Kevin?
Well, I'm a miner. I want everybody to mine, It's like, it's contributing to the system, but like, at the same time, I understand that when you are involved with businesses and products that don't end up in a good way, then it's probably better to just, and you don't have the energy to monitor it, just buy Bitcoin and hold it. And that's it.
Just wanted to add that this is exactly the paradigm shift that I believe we are seeing. Generally speaking, yes, if you're looking for a passive investment, better buy Bitcoin, right? If you don't want to actively take care of it. But there is this characteristics that we had before. If you have overcapacities, if you need to deliver heat and you have no other, let's say, possibility to fix the gap, but using Bitcoin mining, then it makes no sense for you to buy Bitcoin, right? But you have to implement this mining fleet. So this is exactly what I believe is really important to understand, that the field of utility for Bitcoin mining is expanding. It's not just the investment side anymore, but also the utility side.
I strongly believe Bitcoin is the least risky asset that you can buy. So how risk averse are you? Are you risk averse? Buy Bitcoin and buy it every month. Are you able to take on some more risk, and are you able to reach ROI compared to holding Bitcoin? So reaching ROI measured in Bitcoin, then it absolutely makes sense, but not for 5 or 10%. There is risk associated with owning hardware. There is risks associated with mining. So only do it if it makes sense, if you reach ROI, if the benefits are great enough. And we generally advise smaller customers, don't go all in on mining. If you have a portfolio, don't give us more than half for the mining enterprise. Make sure that you are set in terms of Bitcoin before you enter the world of mining.
Well said, well said. Touching the pain of the miners, we'll start with you, Cedric. I'll be touching a question on technological drift. How can someone decide when to change their fleet of miners? What all factors should be accounted for, and how does that affect the overall economics when we talk about the overall ROI?
So it greatly depends on the circumstances yet again. So, for example, if you're able to resell heat at cost price and your energy price is basically zero, you can still mine profitably with S9s. I mean, any miner would still be profitable if your overhead is zero. But of course, that fantastic situation is hard to find, such a scene. So it depends on your overhead cost. If you're stuck with high energy prices, you have access to cheap capital, upgrade the miners earlier. If your energy prices are much lower, after heat reselling and demand response markets, then you have the opportunity to upgrade later. So it's everyone has to make that calculation themselves depending on their circumstances.
This question was asked assuming we have a fixed price, let's say 5 or 6 cents, and then with the technological drift that is happening with the new miners coming in, like, I hope you understood the question here. We are not talking about eliminating your price via heat reuse or other things. I'm talking about when a miner, and as a retail miner, I know that I have a fixed price to pay. Then how can I decide when I need to upgrade my miners?
So personally, I would upgrade my miners when times are great, since it is a stabilizing market. But it's still there is still fluctuations compared to other markets. So if times are great in Bitcoin, that could be, owning a miner is kind of in that regards is having Bitcoin with leverage. So a miner could be worth pennies when it's a bear market. So you could buy in bear markets. If you're breaking even in a bear market, that could be a good time to buy in. And when we're in a bull market and everyone wants to buy miners, that could be the right moment to exit.
I also believe like the fixed point is always the halving, right? And as you all outlined already, doing mining or enter mining is not just, or it also depends a lot on when you actually enter the mining, right? Because you have this, correlation between miner machine prices and the Bitcoin price. Even the correlation got much less than before. So buying miners in a bull market may not be the best thing, as usually when you set up a mining site, it might take some months. You have delays and so on, and maybe you order the miners at the peak bull market and you get them when bear market is already knocking the door. So you're running on less profit, but bought really expensive miners. And I believe you should always evaluate, let's say 1 year before the halving, is my miner actually proof? Like, do I have sufficient efficiency miners? Because right now we see that I think like almost every quarter, every supplier is dropping a new machine out on the market, which basically does not come from, that's pretty interesting, it's not coming from the manufacturers itself because they do a lot of improvements on their chips, but it's because they have privilege with the chip manufacturers, Samsung, TSMC, and they need to take the capacities or their privilege to not lose them, right? So they are basically forced to issue new machines all the time. To come back to the question, I think 18 to 12 months before the halving, and always keeping fixed the halving in mind, that basically changes the game, is a good point to at least check if your fleet is still sufficient and halving proof.
And maybe one point that we didn't touch upon is repairs. I think if your miner breaks down, you need to really be calculating whether a repair makes sense, especially if you have older generations. If you need to do a repair of $250, are you going to be able to recoup that reparation? Or is it then the moment that you need to upgrade and retire that older miner and upgrade your fleets?
Okay, coming to a lightning round, I would request all of you to give one piece of advice for a miner to be sustainable and competitive within the industry.
Invest as an entity and not as a retailer.
Identify your own golden goose.
Yeah, so I have a business perspective. So I would also say a diversified revenue. So you have another revenue that allows you to hodl your Bitcoin and not being forced to sell.
optimize your fleet, optimize your pool, make sure that you're not leaving profits on the table.
Okay, coming to wild predictions, what's one prediction about Bitcoin mining for the next 10 years that might sound crazy but could happen?
How far do you want to go on the crazy scale? All the way. All the way. At minimum, international grid balancing. So Bitcoin mining will be a part of power plant feasibility studies at minimum. At best, I guess all the excess energy produced by our level 3 civilization Dyson sphere.
I have two, because one is kind of stolen from Marco from NiceHash. That hash rate will be traded as a commodity on exchanges. And then my bold prediction is that in 10 years, there's still miners that use S9s to heat their garage.
So I believe that more and more states will enter the mining game, because it's not just Bitcoin that is rare, but it's also block space, right? And having access to the block space is a geopolitical important thing. So I believe, and we already see that actively, right? Especially in the UAE, the US, that regulation is shifting towards that scenario.
I think that hash rate will become a actively traded asset, more important for other things than only for mining. And also, I have a strong suspicion there is going to be a huge shift in technology in the direction of photonic technologies and stuff like that. I think those will be disruptors in the market.
Guys, I'm from the moderator's point of view, I'm done with all the questions from the audience. I would be happy if you have some questions that you would want to ask. Anybody from the audience that would want to ask any questions are more than welcome. Yeah. Okay.
Seems like we did a good job, right?
Yeah, I mean, I really hope we lived up to the expectations. And as the topic suggests, from blocks to watts, the Bitcoin mining revolution. So we have touched 12 important topics that this ecosystem has to offer. And I express my deep gratitude towards all the 4 panelists here. And thank you so much, everyone, for joining this stage. And I hope you enjoyed it.
Thank you.
Thank you.